The fair value gap is the one of the powerful concept of trading. I used this strategy to take a trade like this, and this, but most of the trader used them wrong. The real problems trader face, which fair value gap is likely to work. Not all fair value gap are equal, some have more chances of win. In this video you learn 5 reasons about the FVG, which help you spot high success of fair value gap, and also share you how to trade them. Last reason is most important, so do not miss any part. So without wasting any time, let's start it. First, what is a fair value gap? It is the formation of 3 candles leaving behind a gap, called fair value gap. Price often likely to return this gap. Trader look to enter on this gap, then price shot up higher. After retest the gap. To plot a fair value gap, you find a 3 candle big between the one. Then mark the high of first candle, and the low of third candle. Is called the fair value gap. Next you mark a rectangle on the gap. This concept is the same in bearish. Remember the no gap between the high of one candle and the low of third candle. There is no fair value gap. Alright, you know how to spot or draw a fair value gap. You already learned that not all fair value gaps are equal. Some have more chances of profitable. So now you are going to learn 5 reasons which fair value gaps have more chances of profitable. Number 1. Ensure that the fair value gap have high chance of success if it unmitigated, which means untested. If you see fair value gap on the chart, sure that it have not been tested before, because effectiveness of the fair value gap decreases once the price touches it. If it tested before, there is a no longer valid fair value gap. For example, if you see a fair value gap, look, price touches it before, which means there is no longer effective fair value gap, because second time price enter the gap, it's higher chances price move opposite. There is invalid fair value gap. Here is the fair value gap. Price enter the gap, and reacted perfectly, because price not tested it before. So the best fair value gap entry is the price have not retested it before. When you see a fair value gap, clear its unmitigated gap. Number 2. If you spot a fair value gap, also notice that price closed below or inside the fair value gap, because they decrease the effectiveness of fair value gap. If price close inside the fair value gap, it's mean fair value gap have low chancing of wining. But if price break the fair value gap with large candle, which means there is invalid fair value gap. If price closed outside the fair value gap, which means fair value gap have high probability of wining. So the best fair value gap entry is the price closed outside the gap. When you see fair value gap on chart, clear the candle closed outside the gap. Number 3. You do not need to mark multiple fair value gap on the chart. Always prefer the bigger one on the, such as this. Bigger fair value gap are much more effective than the smaller, because the big fair value gap show real imbalance, and most likely to work like support and resistance in the market. The smaller fair value gap have less imbalance or effectiveness. Number 4. If the size of all the fair value gaps are same, lower fair value gaps have more success of wining than upper fair value gaps. So you need a tool and charting platform like TradingView. You can use GAN box tool. Then you go to the setting and set the price level 0, 0.5, and 1. To use the tool, drag this from swing low to swing high to the movement that contain fair value gaps. 0.5 level separate the fair value gaps, upper and lower. In an uptrend you only focus on lower fair value gaps, and ignore the upper one. Same in the downtrend. Drag this from swing high to swing low to the movement that contain fair value gaps, and only focus on the gap located on the top area. Number 5. Fair value gap or form after the break of structure. This is the high probability setup for trade. Recap. Here is the quick explanation. In an uptrend, price break previous high, and then make another high, and then price also break it, and form another break of structure. Same in the downtrend. Price break previous low, and make a break of structure again and again. If fair value gap form near and after the break of structure, like this one, it's signal of high win rate setup. In such case price likely to return this gap, and bouncing from it. This type of fair value gap are mostly work for perfect entry. So now you have learned 5 reasons to spot high quality fair value gaps. So let me share you best technique for trading them once you have identified one. The best entry point when trading a fair value gap is to enter a trade in the middle of the gap. To do that, we can use the same GAN box tool. Earlier drag it from the low of the fair value gap to the high of the fair value gap. So this middle point will be our entry next. Wait for price to retrace to the midpoint. Once it does, you are good to enter the trade. So you open a buy position, and set a stop loss break of the fair value gap, or the point of invalidation. So if you want to know more technique to trade FVG, comment techniques, and I can make a full dedicated video on best techniques to trade FVG. So if you want to trade fair value in the way of smart money, You have also learned candlestick. You can also watch this video. This a full masterclass on 3 most used candlesticks patterns. If you find value in this video, subscribe.